Hey, it's Chris Koff. I want to talk to you about this slide and some of the impacts of the Crested Butte real estate market trends and what we're seeing, and a little analysis I think that would be of interest. So I'm going to go ahead and share my screen here. Let me show you what I'm seeing and what I think has happened as I look back like over the last 10 years. So if you look at the bell curve, right, and the bell curve in this chart, what I'm showing you in this screen is if you go back to like 2013, what was the price of a single family home in Crested Butte? Probably somewhere on average between a good quality 3 to 4 bedroom home in the 750, 800, $1 million range up to about $1.5 million was kind of the middle of the bell curve. That was pretty average transaction amount back in the day. Certainly there was luxury homes that were closer to 2 million, over 2 million, 3 million. We had very few transactions that were over $4 or $5 million. In fact, I don't think we had, I think it was like on one hand or two hands for the number of transactions that were over $4 million back in 2013. So where have we come and what's transacted? Well, you know, back in the as we came out of the recession right around 2013, 14, we sort of saw for a number of years until COVID, we were like a jumbo jet taking off the airport, right? It was a very predictable price increase and ascension of price points. But once we had COVID, you know, everything froze for about 75 or 90 days. And then people were back and buyers were in the market, and we saw this big spike, right? For about 2 years, it was crazy across the country as everybody decided that since they weren't going to be spending as much time in the office, or they couldn't go back to the office, or they were restricted from the office due to COVID, they were working at home, and their home wasn't set up for working, you know, with their family there. And on top of them, a lot of people wanted to trade homes or trade up or move to a different location. Or in the resort markets, we saw a ton of people said, well, if I have to work in my home in Texas or Oklahoma or wherever, I could work remotely in a home in Crested Butte. So the buyer demand in Crested Butte was significant. And what we saw at the low end was like a giant vacuum cleaner. All the low end inventory got bought up. And then, you know, as well, those price points and the ascension of price points was pretty steep. And it was a pretty crazy time for a couple of years here with transactions and competition for you know, buying a home, and the number of you know, homes that got sold at pretty high price points. So where are we now? Well, I think that bell curve, as we look at the end of 2023 into 2024, you know, I think that bell curve continues to shift. I don't see, you know, we've kind of plateaued about a year ago. We really toward the end, about 6 to 9 months ago, we started seeing the effects here of a reduction in buyer demand. That was kind of affected by the interest rate increase and some of the things that were going on in the backdrop of the economy, but mostly because, you know, when you can, if you're going to buy a home that may be more expensive than you would normally purchase, but you can get it, you know, at 3% mortgage, you know, interest rate, then a lot of people had that opportunity. When you look at you know, doubling that rate to 6 or 7% for a second home, jumbo loan, et cetera, in this market, then now that is out of reach for a lot of people. So as this bell curve has shifted, and now we're, you know, the average, you know, is closer to 2 million, and there's many more transactions in the 2.5 to 3.5 to $4 million range. We're seeing that inventory, and there's a lot of homes in those price ranges. Certainly there's homes even much higher than that, but we're seeing record breaking asking prices out there, and some, you know, transactions, some sales at those very, very high numbers as well. And mostly that's pretty high quality, new construction, large homes. But the bell curve for the majority of transactions here has shifted, and we're seeing those price points shifting as well. So what are the variables that are affecting this price increase? The COVID spike, as I mentioned, the resort market Super Bowl, what I call. In every other market, we saw price ascension, right? But in the resort markets, we saw a little bit higher. You know, it's kind of like a Super Bowl goes higher. And the desirability of a mountain home, I always say, you know, clients say, well, I've got a choice between buying a home on the beach or in a warm, ocean beachfront climate, or the mountains. And I say, well, beach is always going to be a beach house, but a mountain home is different. You have the summer and fall weather and climate and activities and adventures. And then you have the winter ski season for alpine skiing and Nordic skiing and all that. So you're really getting 2 for 1 in a mountain home, because you have those different times of the year. Springtime, not so much, because once the lift stops spinning, then, and we're still kind of, winter is coming to an end. It really, we're seeing the shoulder seasons increase into the May and June timeframe, but for the most part, summer and fall and then winter are 2 different seasons. So it's a very desirable place for families and friends and entertaining clients, and using your second home in the mountains as an opportunity to create your lifetime of memories, right? And so the second homeowners also don't have to sell. So it's not like a primary market where generally a second homeowner is forced to sell, unless we have some major economic downturn. I don't anticipate that we're going to see something like we might have seen in the 2008, 9, 10 timeframe. But second homeowners are mostly at a pretty high price point, because we had so many transactions, and a lot of them are patient and so don't have to sell. So I don't think you'll see a giant any kind of price reductions. I think this plateau is going to continue, and then it will probably creep up, but not certain what's going on with some of the backdrop of the world events and the national economy, et cetera. The other thing is building prices here. We've seen construction prices, quotes from builders in the 900 to 1200 square foot range for new construction. A lot of that is driven by the higher price points of some of the subcontractors. And it's really not that the builders or the general contractors are raising their fees. It's just that the overall, and it's really not materials, it's mostly labor. Don't see that changing a whole lot either. So I think that somehow you look at all these variables, and it's sort of protecting, these price points as well, because, it used to be that you'd say, well, I can buy a piece of land and build, and I can get a new home and it's going to be less expensive. Well, now the existing inventory generally, even if you have to do a remodel, might be an opportunity for you to put your head on a pillow in 45 days versus 2 to 3 years. Generally closer to the 3-year time frame by the time you get plans done and you get you start getting the first spade of dirt turned over and the construction started. It's about a 3-year time frame from start to finish. And so for some people, that's their dream. And I've helped a lot of people to purchase that dream property and introduce them to architects and builders so they can build their dream home. But for others, people are like, well, gosh, I don't want to wait that long. I want to put my head on a pillow in 45 days. Well, buy an existing home. You could always do a remodel or change things around. But anyway, those are some of the variables. Now, what's the effect or the impact of these price increases? I look at this like the pyramid. So if you think at the bottom of the pyramid, there's a lot of buyers and a lot of people that could strike a check for $1 million home or, a single family home. We're seeing the same price ascension for condos and townhomes. So all this is the same. I'm using single family homes kind of as the model here. But if you were, a lot more people at the lower end that can, buy a home at $1 million or maybe $2 million or whatever. But as you start to move up this, you start to get to the same home, perhaps, maybe a more luxury home, maybe a bigger home, maybe a nicer home, maybe a newer home, but there's going to be fewer people that have the ability to purchase that home. So we're having a shift as well in some of the demographics, more affluent buyers coming into the market as the low end inventory has there's not a ton of inventory right now at the low end of the market. So that's kind of what we're seeing as well as far as the patterns and trends. And, we're seeing more cash buyers that aren't as affected by the interest rates as well for a mortgage. Certainly, some people might show up and they may get an investment or a line of credit on their investment portfolio or on their business. But in general, a lot of cash buyers that are, had a financial event that they were able to go ahead and purchase a home. But anyway, I hope this is helpful and makes sense to you. It's kind of the transition that we've seen here over the last 10 years. Who knows really where we're going. I don't have a crystal ball other than I think we're going to continue to see, a price ascension. I think we'll get off of the plateau and we'll be back onto sort of a more predictable price ascension unless we see some major event. Nobody predicted COVID and that spike, and I don't think anybody's going to predict a major recession. There was certainly talk of that a year ago. Some people are talking now about a slight recession. Who knows? But I believe that we'll either stay on this plateau or and perhaps increase. So anyway, if there's anything I can do to help you in your real estate needs, whether you're a buyer or seller, please reach out to me. And as always, have an awesome day.